Hey everyone, in life, we've all probably had those moments, haven't we? Times when, despite our hard work and ability, we just can't achieve the success we dream of. Why does this happen? Do we make mistakes? Or does our mindset somehow hold us back? These questions become even bigger when we step into the world of trading. Trading. A mind game. Trading isn't just about buying and selling shares. It's a game of the mind and emotions. It's the one game where the biggest battle isn't against someone else, but against yourself. If we can control our emotions in this game and steer our thoughts in the right direction, then trust me, success will come looking for you. But it's not that easy. To understand this struggle, there's a book considered a milestone for top traders worldwide, Trading in the Zone by Mark Douglas. This book isn't just for traders, it's for anyone who wants to win the game of their own mind. Friends, the world of trading is like a battlefield. Here, at every turn there's fear and greed. When you buy a share, there's a fear it might go down. When trading goes well, greed grows. You think, maybe I can make more profit. These very emotions can force you to make wrong decisions. Understanding yourself. Before the market, the author of this book, Mark Douglas, teaches us that to understand the market, it's most important to understand ourselves first. He says that trading is a mental game, and to win it, discipline, consistency, and a detached mindset are essential. You shouldn't be afraid of losses, nor should you get attached to profits. In this video, you'll learn how you can overcome your fear and greed and enter the zone in trading, a place where every decision you make will be well thought out. In that state, you'll learn from your mistakes, and most importantly, you'll be able to see the market without any bias. The words in this book teach you trading strategies, but even more than that, this book teaches you about yourself. The lessons you learn here, beyond trading, can bring revolutionary changes to your life. The path to success. So friends, make sure to watch the video until the end, because on this journey, you'll not only understand the depths of the market, but also see yourself from a new perspective. If you like the video, please like, share and subscribe. Let us know in the comments what challenges you're facing in the world of trading. Let's learn, grow and write a new story of success. Chapter 1. The Path to Success. Author Mark Douglas, in this chapter, explains that for success in the stock market, there are three main components: fundamental analysis, technical analysis, and most importantly, mental analysis. Most traders try to understand the true value of a stock through fundamental analysis. After that, through technical analysis, they try to understand the market's movements. This technique helps in anticipating potential future ups and downs, and as long as the stock market runs, the importance of technical analysis will remain. But here's a very important point. Without mental analysis, both fundamental and technical analysis are incomplete. There's often a big difference between what's happening in the market and what traders understand. To achieve success in the stock market, a trader must first work on their thinking and mental state. The two types of traders. Many times, traders remain unhappy even after making a profit because they only focus on the market's ups and downs and don't pay attention to what's going on in their own minds. They always feel like they could have earned more. This thinking puts them under unnecessary pressure. There are two types of traders in the stock market. One who always makes money and another who continuously suffers losses. So the question is, why is one group successful and the other unsuccessful? Is the successful group smarter? Do they work harder? No. Their biggest difference is mental analysis. The key to success: mental analysis. People who always achieve success include mental analysis in their trading system. They know how much money they need to make in a trade, how much risk to take, what the market's direction is, and when to step back. These people don't trade based on superstition or emotion. They take trades with risk management. Their thinking is different from others. Whatever the situation, they remain focused, disciplined, and full of self-confidence. This is the real key to their success. You'll see that doctors, lawyers, scientists, engineers, officers, or retired individuals also lose money in the stock market. The reason for this isn't a lack of knowledge, but rather that they haven't developed their trading psychology. Success in the stock market means taking risks. But that doesn't mean taking risks without thinking. Accepting risk and cutting losses at the right time is the biggest trading skill. When you master this skill, you'll rise above the fear of the stock market. Risk as a skill. If you think like a businessman, taking risks will become a skill for you. This skill will not only protect you from market fluctuations, but also help you get ahead in the market. Trading psychology teaches us that in every trade, we should decide how much money we're prepared to lose. The cycle of profit and loss in the market will always continue. No situation is permanent. If we accept this situation, we can view trading with a calm and confident perspective. Many people continuously lose in the market because they trade emotionally. They expect every trade to give them profit, but this thinking is completely wrong. Success in the stock market only comes when you can control your emotions and take every trade with a plan. Overcoming fear. Why does taking risks feel scary? Because we see it as a threat, not an opportunity. Imagine you're giving a presentation on stage for the first time. You'll feel fear. This same fear stops you from taking risks. But as you practice repeatedly, your fear disappears. Similarly, in trading, when you learn proper risk management and continuously work on it, the fear of the market gradually disappears. Mental analysis teaches us to recognize our emotions, take every trade with a plan, and accept both profit and loss. Only those people are successful in the market who know how much they can lose and when to stop. They never trade blindly. Remember, the main objective of trading isn't to make a profit every time. Its real objective is to manage losses and keep your risk under control. If you proceed with planning in every trade, you'll gradually stop being afraid of market fluctuations. You'll face every market fluctuation with self-confidence. The power of mental strength. In the end, Mark Douglas says that accepting risk is the greatest skill. When you learn this, your journey to success in the stock market will begin, because only those people win in the market who are mentally strong and know how to control their emotions. Remember, the key to success is in your hands. Understand the market, recognize your inner weaknesses, and then move forward with a strong trading psychology. This path will lead you to success. Chapter 2. The Lure and Dangers of the Trading Business. In this chapter, Mark Douglas tries to make us understand that people are often attracted to the stock market for the wrong reasons. We like to experience freedom. Everyone likes to live on their own terms. But when it comes to trading, this freedom can often put us in trouble. The freedom and its pitfalls. As soon as you step into the world of trading, it feels like there are no strict rules. When you take a trade, an infinite world of possibilities opens up before you. But still, most traders lose their money. This happens because their mental framework or psychological skills are not fully developed. When a trade goes against our thinking, it can be challenging to maintain mental balance. But the hallmark of a skilled trader is to remain calm and composed, even in adverse situations. Mark Douglas says that the stock market generates new opportunities every moment, but the real art is to take advantage of these opportunities correctly. The author advises us to learn from a small child. Children are enthusiastic about everything and find joy in every task. No matter what the circumstances, the same attitude is necessary in trading. We should consider every trade an opportunity to learn and enjoy, instead of getting bogged down in stress. The importance of discipline. Maintaining discipline in trading is paramount. Adhering to discipline is essential to avoid losses. The stock market doesn't teach anyone mental stability. There are no rules here that guarantee that today's price will be the same as tomorrow's opening price. When you enter a trade, you should first decide how much risk you are willing to take. This thinking lays the foundation of a responsible and successful trader. Challenges in trading. Several problems arise during trading that a trader has to face. The author divides these problems into 3 main points. 1. Lack of rules. The biggest challenge of trading is that there are no fixed rules. Every activity in games or life has some rules and regulations, but in trading, you have to make your own rules. 2. Not taking responsibility. Whether the results of trading are good or bad, you have to take full responsibility for them. It cannot be that when there is profit, you take credit, and when there is loss, you blame the market or fate. 3. Addiction to reward. Getting lost in the rewards of trading or overtrading can be dangerous for a trader. Avoiding overtrading is very important. If you continuously trade only for the lure of profit, this habit can have a negative impact on both your mental and financial health. The right mindset. To become a successful trader, the most important thing is the right mindset. Trading is not just a means of earning money, it's a journey that teaches us self-reflection and discipline. Mark Douglas tells us that the biggest challenge in trading isn't from the market, but from our own thinking. You should always pay attention to maintaining control in every situation. If you cannot control your emotions, the market will defeat you repeatedly. The stock market changes every moment. There is no stability here. Therefore, If you learn to align with the market and adapt yourself accordingly, you can not only enjoy your trading experience but also make a profit. To succeed in trading, you will need to develop discipline, mental balance, and the habit of taking responsibility. The market offers countless opportunities every moment, but taking advantage of these opportunities depends on your psychological and mental skills. So next time, when you step into trading, remember that blaming the market or cursing fate is not right. The real responsibility is yours. The market offers countless opportunities. Now it's up to you how you take advantage of them. Trading, accepting responsibility. Author Mark Douglas, in this chapter, tries to explain that trading is not a random activity, but a deep responsibility. Accepting this responsibility is the first step towards success. But it's not that easy either. Taking responsibility is exactly like a mother caring for her sick child, with complete dedication, patience, and devotion. Ownership of outcomes. To succeed in trading, it's most important to understand that the responsibility for every win and every loss is yours alone. Understanding how responsible you are for your mistakes and successes is what can make you a skilled and successful trader. The author says that trading is not a job, but an art, and to refine this art, bearing the burden of responsibility is essential. The biggest obstacle in trading is fear. When you learn to eliminate fear, your mistakes also decrease. It's essential to think like a successful trader and develop the habit of learning new things. By avoiding fear and carelessness, we must make every decision with self-confidence. We should avoid trading driven by hopes and emotions. Sometimes, we make unnecessary assumptions and make wrong decisions while chasing them. A skilled trader is one who, even with continuous wins, does not become overly confident and maintains their mental stability. Trading can be a good medium for making money, but the question is, how do you feel when there's a loss? Do you try to learn from that loss, or do you blame the market? The author says that skill is not always perfect, but the will to win and the feeling of taking responsibility must be present in every situation. Fear and greed, the trader's enemies. Fear and greed are the biggest enemies of new traders. Often, due to fear, good trades slip away, and due to greed, bad trades worsen our situation. This is a common experience in trading. When a trader is winning continuously, they often take their success lightly. Due to this overconfidence, they start overtrading, violate rules, and ultimately lose their money. This behavior is not only harmful, but also shows that the trader still hasn't learned to take responsibility. The balance of confidence and patience. Statistics show that traders who constantly win are very few. Many traders continuously suffer losses because they fail to understand the market's movements. Other traders make money, but they lack the skill to maintain that money permanently. Some traders consistently make money, but lose everything in one big loss. The biggest secret to success is the balance between self-confidence and patience. The market is not affected by any trader's mistake. The market moves at its own pace, and the trader needs to understand and internalize this pace. If you don't take responsibility for your results, you won't learn anything new. Not taking responsibility is the biggest obstacle on the path of development and change. When we lose, it's easy to blame the market, but the truth is that the market is neither our enemy nor our friend. It always gives us opportunities, but utilizing these opportunities correctly is our responsibility. The key to a trader's success is to develop a winning perspective. Only you are responsible for your wins and losses, not the market. Trading as an art and philosophy. Author Mark Douglas, at the end of the chapter, says that this mindset not only refines your trading skills, but also gives you the opportunity to view it with a different perspective. There's a big difference between trading with your own money and when another trader encourages you to trade with their money. When using your own money, you feel a sense of responsibility at every step, whereas when the money belongs to someone else, the seriousness in your decisions might decrease. Trading is an art and a philosophy. When you start seeing it as an art, you'll be able to enjoy every aspect of it. Trading is not just about technical knowledge, mental stability is also very important for it. It's a journey with ups and downs, and it's not possible to win every time. But this doesn't mean you'll remain in this struggle. Sometimes during trading, it feels like the market is against us. It's our mind that forces us to think this way. The market gives us information every moment, but we often fail to accept it. Due to wrong decisions and assumptions, we get stuck in a cycle of loss. In reality, a trader's struggle is not against the market, but they are fighting with their inner fear, insecurity, and struggle. This mental resistance is what stops us from making the right decisions. Embracing uncertainty. Mark Douglas emphasizes that it's important to accept every aspect of the market with an open mind. An important part of trading is understanding and accepting risk. If you are afraid of the outcomes, you will never be able to make the right decisions. Fear negatively affects your thoughts and perspective. Mark Douglas says that you should be prepared for every situation. You can only move forward by accepting the uncertain nature of the market. When you end your inner struggle, trading becomes easier. For this, you must first be free from fear. When you trade without fear, taking risks will also feel like a natural process. Many times, when a risky situation arises in the market, traders panic. Due to this panic, they make wrong decisions, which not only reduces their profit but also hurts their self-confidence. This is the time when mental stability and consistency are most needed. To become a successful trader, you have to take full responsibility for your decisions. Careless trading can be the biggest cause of your losses. Before every trade, it's important to decide how much risk you can take. Only after knowing this should you finalize your decision. A new mindset, adopting new ideas and a new mindset in trading is also very important. Every day there are new changes in the market, and understanding them and improving your strategies is the key to your success. If you adopt this with an open mind, you can achieve everything you want from the market. Keeping your mind stable in trading is very important. When your mind is calm and balanced, you can handle the market's uncertainties better. Abandoning wrong assumptions and thoughts will be beneficial for you. Douglas says that you will only get what you are mentally prepared for from the market. Therefore, keep your beliefs clear and positive. When you are mentally strong, you will be able to face every challenge of the market easily. Chapter 5. The Dynamics of Perception. Author Mark Douglas, in this chapter, teaches us that success in trading is not limited to technical knowledge, but also depends on your perceptions and mindset. The main objective of this book is to free you from wrong assumptions and unnecessary anxieties associated with the stock market so that you can improve your trading experience. Seeing opportunities, the market itself doesn't create any data that is specifically useful or useless for anyone. Every piece of information present in the market is neutral. It's the trader's perspective and mindset that makes this data right or wrong. The determination of success and failure in trading completely depends on the trader's thinking and perspective. A successful trader is one who is not afraid of the market. For them, there is no danger in trading, because they know the art of turning danger into opportunity. According to Mark Douglas, every trader should understand that to achieve success in the stock market, it's very important to remove harmful mental blocks from their mind. Developing a simple and positive mindset is the change that can make you successful in trading. When you keep your thinking simple and clear, you'll be able to take advantage of the opportunities available in the market. The real purpose of trading is to find opportunities every time. For this, you need to get out of your mind's analytical trap and focus on mental analysis. Focusing on the present, the most important thing in trading is your perspective. Mark Douglas explains that different people can see the same chart from different perspectives. The chart remains the same, but your thinking and perspective make it special. The trader must understand that to see the opportunities hidden on the chart, it's necessary to change their perception. Often, traders see the chart the way they want to see it, but due to this mindset, they don't get the right results. Every day, the market creates new situations. A good trader's focus is only on the current data. They focus only on current opportunities, putting aside their past experiences and future speculations. Fear and insecurity are the biggest obstacles in trading. When the market situation seems frightening, traders often panic. The author asks some questions to explain this situation. Is the current market information actually dangerous, or is it the effect of your mental state? If your last 2 trades went wrong, and now you have some good opportunities, does it feel risky to you? Do you start thinking that this trade might go wrong, and due to this thinking, you lose some opportunities? The author explains that traders often fail because they allow negative thoughts and wrong assumptions to occupy their minds. Their fear and insecurity prevent them from making better decisions. The secret to a trader's success is to keep your beliefs flexible. The market is new every day, and you need to understand it every day with a fresh perspective. The clear message of this chapter is, the path to success in trading passes through your mind. Only by removing fear, insecurity, and incorrect assumptions can you truly see the market's possibilities. Mark Douglas teaches us that if you make your thinking flexible and your mindset positive, you will be able to take advantage of every opportunity in the market. Trading is not just a game of data or technical knowledge. It is a mental game, And to win this game, you need to keep your beliefs dynamic with the ever-changing market. Chapter 6. The Market's Behavior. Author, Mark Douglas. In this chapter, the author emphasizes the market's behavior and the importance of understanding it. He explains that a trader's risk-taking ability is often influenced by the outcomes of their two most recent trades. If recent trades have been good, confidence increases, and if the results are opposite, fear can dominate. But a successful trader transcends this mindset. They are neither overly excited nor disappointed by their past trades. Successful traders don't have any extraordinary characteristics, rather, their success lies in their trading psychology. They maintain a balance between fear and confidence. They understand the opportunities the market provides them and trade accordingly. Trading in the zone concentrates on current opportunities, not on future worries or past experiences. These traders don't overly concern themselves with the immediate profit or loss in the market. No matter what happens, they continue to act according to their plan without being influenced by self-doubt or internal conflict. Their focus remains on recognizing available opportunities in the market and taking advantage of them at the right time. Mark Douglas emphasizes that the ability to recognize opportunities can be developed. For example, Warren Buffett says that it's not necessary to find solutions to all problems in business. If a question cannot be solved, one should learn the art of avoiding it. Similarly, Charlie Munger says that it is more important to avoid making wrong decisions than to merely try to be intelligent. This perspective also proves to be more beneficial in trading. For success in trading, clear thinking and correct assumptions are essential. This is an activity that has no time or spatial limitations. The market can behave unexpectedly at any time. Mark Douglas explains that there are only two ways to make a profit in the market. First, buying low and selling high. Second, selling high and buying low. The author mentions three common mistakes in trading that both new and experienced traders often make. 1. Not managing risk. If you cannot assess risk, you may fail in trading. 2. Failing to cut losses. It is crucial to understand how to control losses. 3. Taking profits at the right time. Recognizing the right moment to take profits can affect your success. Market prices change due to two main forces: bulls, those who expect prices to rise, and bears, those who expect prices to fall. Their activities affect prices. However, Mark Douglas explains that recognizing the true forces hidden behind these activities is the key to trading. In this chapter, the author tries to convince us that anything is possible in the market. If we adopt this mindset, our minds will be ready to recognize opportunities and take advantage of them. When we trade with the belief that every situation is an opportunity, our thinking becomes more open and flexible. The other side of trading, a game of probabilities. In this chapter, the author highlights the second aspect of trading, which is the art of making decisions based on probabilities. The author explains that trading and gambling have superficial similarities, but there is a significant difference in their fundamental structure. Gambling is a game with unknown probabilities, while trading is a process of recognizing and managing probabilities in a structured way. Just as in a game of chance, the market also unexpectedly provides us with information. But the ultimate goal of both is the same: to make money and take it with you. During this process, both give us opportunities, but their nature is different. Consistent success in trading depends on your beliefs, knowledge, understanding, and perspective. It cannot be seen merely as a matter of luck like gambling. In gambling, you are at the mercy of luck, whereas in trading, it is essential to study probability patterns and subtle indications. The author says that in any game, whether it's gambling or trading, study is important. But here, the study should focus on only one thing: what could happen next. However, predicting future probabilities is not easy. There are two main reasons for this. 1. The visible signs we see in the market are often uncertain and subtle. 2. Our decisions are influenced by confidence and probabilistic thinking, which sometimes makes us ignore clear signals. For good trading outcomes, it is essential to deeply study all signals and indicators and recognize the subtle probabilities hidden within them. It is not enough to just see which indicator is correct. You also need to know how to use it. The art of perfect timing is very important in trading. Deciding when to enter and exit a trade at the right time for profit is one of the essential skills in trading. Not all indicators prove correct every time, but to achieve success in trading, your mindset must be correct at all times. This is the foundation on which all your decisions rest. A successful trader never changes their mindset with every trade. The decision to trade should be taken with confidence, assessment, and responsibility. Anything can happen in the market, so you should always have a suitable target. You should manage risk and pay attention to every small and large probability. A successful trader does not waste time dwelling on the past or worrying about the future. They focus only on the present. They accept the uncertainties of the market and believe in taking risks. In trading, only money is at stake, so you should fully accept whatever you get from the market and move forward. You should not lose current good opportunities by regretting past wrong decisions. Fear and greed are the two biggest enemies in trading. Greed repeatedly prompts you to take unnecessary trades, while fear prevents you from taking advantage of good opportunities. A successful trader controls both of these. The author explains that the most important aspect of trading is to correctly analyze subtle events and probable outcomes. Learn from wrong decisions, but don't let them dominate your current decisions. Chapter 8. Working with your beliefs. In this chapter, author Mark Douglas tries to explain to us how important our beliefs and their characteristics are in leading us on the path to success. He explains that our beliefs are not just a source of personal pleasure, but also provide us with the foundation to move forward in our work with dedication and skill. In the context of trading, the author clarifies that with the help of technical analysis, a trader can better understand the market's ups and downs. But mere technical knowledge is not enough. The market offers new opportunities every moment, and to recognize these opportunities, we need to get out of our fear and wrong assumptions. The author repeatedly reminds us that every moment in the market is unique. Adopting the principle of here and now is most important for a trader. When we avoid action due to fear, we lose market opportunities. Why does fear arise? Because we look at the market only from a generalized perspective. We think we know everything and get stuck in this misconception. Our mind assumes that what we have seen or experienced before will happen again. But the reality of the market is that every moment brings new possibilities and new events. To be successful in trading, we must accept that everything in the market is uncertain. We need to break free from our old beliefs and embrace the reality of the market. In this chapter, the author mentions 5 important truths of the market that every trader should understand. 1. Unknown forces are active in the market at all times. This means that the market is always changing. We must accept its unpredictability. 2. To make a profit, you don't always need to know what will happen next. The idea that we can predict the future distracts us. We should only focus on our strategy and skills. 3. Every trading outcome is based on certain factors, but these factors are so diverse and unique that their sequence cannot be predicted. 4. A trader's success depends on their inner confidence and discipline more than any external factor. Your morale and self-confidence affect your success. 5. Every moment in the market is unique. No moment is like the past moment. Understanding this is the key to success in trading. A large part of success in trading depends on maintaining psychological balance. When you accept risk and take it as a challenge, you can control your fear. This mindset fills you with the energy that helps you recognize market opportunities. When you trade with this mindset, you can easily enter the trading zone. This is a state where you are not only full of self-confidence but also capable of understanding every signal of the market. The nature of belief. Author Mark Douglas. In this chapter, Mark Douglas explains the depths of belief and its role in the world of trading. He says that if you want to generate new interest and possibilities in the market, you need to adapt to the market's dynamism. To achieve success in trading, it is very important to eliminate anxiety or internal conflict. This chapter explains the scope of belief in detail. Our minds are often not fully present in the current moment. When we don't fully accept the present, thoughts of the past and future dominate our decisions. This habit is especially detrimental in trading. The author explains that we need to focus our energy on the present moment. If we cannot leave old beliefs and experiences and live in the present, then trading can become a difficult experience. Understanding the nature of belief can help strengthen our thinking. When we understand the origin of our beliefs, it helps us develop new psychological assumptions. This new assumption increases our self-confidence in becoming a successful trader. The author explains that beliefs can be understood based on 2 factors. 1. They originate from our personal experiences. 2. They are expressed through our actions and thoughts. In trading too, our beliefs directly influence our decisions and outcomes. We express our beliefs through our actions and words. The author explains that our interests are the main source of our motivation. It is from this motivation that our lives and actions get shape and direction. The author emphasizes that faith and belief provide depth and meaning to life. When you have a deep interest and faith in trading, it further enhances your experiences. Trading is not just a technical process, it is a reflection of your mind and perspective. The author says that you need to regularly review your position in trading. It is important to understand whether your interest in the market is real and continuous. If so, you will certainly see positive results from your efforts. At the end of this chapter, the author suggests self-analysis for trading. He encourages you to ask yourself some important questions. Do you have enough energy, capability, and time for trading? Are you ready to advance and improve your trading strategies? If you don't have the right belief, passion, love, and investment capability, how will you become a successful trader? Are you adopting a balanced perspective in your life and trading? The author explains that a physical and mental balance is necessary in life. This balance comes only from deeply understanding yourself and recognizing your weaknesses. Chapter 10. The impact of your beliefs on trading. In this chapter, author Mark Douglas explains that our beliefs have a profound impact on our trading. Success in trading is not limited to technical knowledge or market understanding, but also depends on how deeply we understand ourselves and our beliefs. It is essential to examine our beliefs because they guide our thoughts, decisions, and ultimately, our results. Understanding how our mind works and how our beliefs are formed is the first step towards achieving consistency and success in trading. In trading, excessive confidence and over-enthusiasm can be dangerous. When we are overly confident or act with excessive emotions, we increase the likelihood of making mistakes. The author says that your thoughts should be balanced and connected to the current situation. If your thoughts don't match reality, it can lead to heavy losses. Our beliefs affect not only trading, but our entire lives. They are deeply embedded in our mental environment and influence every decision we make. Our experiences are deeply embedded in our subconscious mind, and they gradually form our beliefs. Many times, experiences that we don't even clearly remember influence our thoughts and behaviors. According to Mark Douglas, analyzing and evaluating your beliefs is very important in trading. This self-assessment will help you understand in which direction your decisions are going and whether they are correct. Trading is a medium that offers many opportunities to generate wealth, but society often believes that some ways of making money can be wrong or unethical. This perception can affect us internally and create uncertainty in our decisions. If you are aware of your inner self and have clarity about your beliefs, then these negative feelings will not bother you. Being honest with your beliefs and values will lead not only your trading but your entire life in a positive direction. Belief is not just a thought, it is a type of energy that can resist any external force. The author believes that if our beliefs are strong and clear, they keep us stable even in difficult situations. According to our needs and circumstances, we can change our beliefs. Bringing about change is not easy, but it is possible. When we turn our thinking in a better direction, our belief also changes, and its effect is clearly visible in our trading and many other aspects of life. In trading, it is essential to maintain a balance between positive and negative thoughts. Once we identify our beliefs, making decisions becomes easier. Removing negative thoughts and focusing on positivity creates a strong mental foundation for us. The author also explains that success in trading is not limited to just making profits, it is based on self-discipline, clarity, and mental peace. Your beliefs keep you stable in difficult times and give you the strength to move forward in the right direction. Chapter 11. The Trader's Mindset. Author, Mark Douglas. In this chapter, Mark Douglas discusses the trader's mindset and psychology. Trading is often considered one of the most difficult professions because there is always uncertainty. Whenever a trade is placed, it is never certain what will happen next. This uncertainty makes trading both challenging and exciting. Mark Douglas says that to become a successful trader, we need to constantly develop our thinking and perspective. This is not limited to just technical knowledge or understanding the market. It is a mental process. The author has explained 3 stages to understand this process, which help in developing proficiency and accuracy in trading. 1. The mechanical stage. In this stage, the trader needs to develop self-confidence in an uncertain environment. The main focus at this stage of trading should be on understanding and trusting your system. There should be no doubt while trading. Use your mind and explore possibilities. Analyze the market every time and bring consistency to your decisions. Mark Douglas explains that the biggest challenge at this stage is to accept market uncertainty and still maintain faith in your strategies. 2. Self-discipline. This is the time when a trader needs to self-assess. It is very important to test yourself to correct mistakes made during trading. At this stage, you need to control your sensitivity. Every small and large event in the market can affect your decisions. That's why you need to identify your fears and insecurities and work on them. This process can be difficult, but it makes the trader mentally strong. 3. Intuitive stage. This is the final stage where the trader has to trade with their intuition. This is similar to achieving a black belt in martial arts. When you reach this level, you can trade intuitively based on your experience and intuition. This state is achieved with a long period of dedication and commitment. Here, the trader deeply understands every aspect of the market and makes correct decisions without overthinking. The author explains that thinking that your target will always be met in every trade is not correct. Instead of worrying about the timing, enter the trade at the right time, set stop loss, and take whatever profit is visible in time. Consider trading an uncertain process and accept it. The author compares it to a casino, where uncertainty always exists. But to win in a casino, you need a better strategy and mental calmness, and the same applies to trading. Risk management is important in trading. The author suggests a risk-reward ratio of 1:3. This means that whenever you trade, your timely profit should be 3 times your risk. Don't let fear dominate your decisions. Fear not only affects your decisions, but also weakens your self-confidence. To become a successful trader, you need to trade fearlessly. To achieve success in trading, you have to see it as a passion. It is not just a means of earning money, but a process that makes you mentally mature. Always try to be trading in the zone. This means that you take every decision with complete concentration and self-confidence. When you trade with this mindset, you are better able to handle the uncertainties of the market. Trading in the Zone is a book that promises to completely change every trader's mindset and approach. In this book, Mark Douglas has tried to explain that the biggest enemy in trading is neither the market nor any strategy, but our own psychology. If you liked this video and learned something new from it, don't forget to like it. Also, share it with your friends and other traders so that they can also understand these important lessons from Trading in the Zone. Subscribe to our channel and hit the bell icon so you can get notifications for our next videos first. We will meet again next time with a summary and lessons from another great book. Until then, be happy, keep learning, and keep moving forward towards your goals. Thank you.